The escalating geopolitical tensions between China and Taiwan have raised concerns about the potential economic and financial consequences of a conflict between these two entities. This video will analyze the possible ramifications of such a conflict on the global economy, including disruptions to supply chains and trade flows, volatility in financial markets, and currency fluctuations. China and Taiwan play crucial roles in the manufacturing and technology sectors. Taiwan is a major producer of semiconductors, while China is the world's largest exporter. A conflict between these two regions would undoubtedly disrupt supply chains and trade flows, leading to shortages and price increases for key technological components. This disruption would have a significant impact on industries worldwide, including consumer electronics and automotive sectors. Both China and Taiwan are key players in international trade, and any escalation in their conflict could have a ripple effect on global financial markets. Investors would become wary of the uncertainties surrounding the conflict, leading to increased volatility and potential downturns in stock and commodity markets. The heightened geopolitical risks would make investors more hesitant to commit their funds, impacting international investments and capital flows. The Chinese yuan and the Taiwanese dollar are significant currencies in international trade. A conflict between China and Taiwan could trigger a depreciation or appreciation of these currencies, making it challenging for businesses and investors to manage their currency risks effectively. The fluctuation in currency values would further add to the economic uncertainties and impact global trade. The economic and financial implications of a potential China-Taiwan conflict are far-reaching and profound. Supply chain disruptions, trade disruptions, financial market volatility, and currency fluctuations are all aspects that the global economy would have to grapple with in the event of such a conflict. It is crucial for policymakers, businesses, and investors to closely monitor developments and prepare for potential scenarios to minimize the potential adverse effects on the global economy. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.